Good morning, everyone, and thank you very much for joining us in this session. I would like to begin the presentation with a group profile. So this is who we are now. Not much of a change, but I just would like to highlight once more that we have our solar farm, which is the expansion into the renewable energy, and we are increasing the capacity of our pyrolysis plant, and we hope this will get off the ground by sometime next year. In the healthcare area, we also have a new product called Vicnox, which is a kind of lozenge that can actually help retard the proliferation of virus. So it's very helpful, especially during winter season when there's a lot of respiratory related illnesses. The initiatives are not much different from the last time I made my presentation. We are still moving forward deeper into the green cement and green building products, innovative specialty polymers as well, and bioorganics for agriculture-related applications. Then we have green energy and power. And the cost efficiency via plant retrofitting continues. But as we indicated at the beginning of this year, the CapEx will go off ramp by 2026. And most of these CapEx are ESG related, and most of them also are cost efficiency related. These are the products that we have right now, pretty much similar to what we have shown before, except that this is the wood substitute, and we got a patent on it from the US, and we have begun sending the product to the US market. Hopefully, this will take off and it can allow us to penetrate deeper into the US market. So these are our solar related facilities. We have a farm, and then we have also the roofs on our distribution centers. And this helps us significantly reduce the offtake of power from the grid. And even for our solar plant also, it provides the electricity that is needed for the cementation process. And we still continue to take some power from the grid, but much less. So the 9-month and third quarter performance, the group sales dropped slightly due to the lower contribution from the energy and utilities. This is related to the expiry of the other in the pricing for the 90 megawatt. And on a Q-on-Q basis, construction material also went into a seasonal low. But normal operating profit, i.e. before extra items and before tax, rose significantly, and this is largely to the margin improvement in the construction material division. EBITDA is also up, high single digit, and excluding the FX elements, because FX we book as part of revenue, EBITDA is actually up double digit. As I mentioned earlier, the lower contribution from power is due to the other expiry. And Consmat division was the key division for the third quarter, and we can also say for most of the 9 months. And the weakness in the third quarter is nothing new, it's the seasonality. Perhaps we could say that in this particular year, the seasonal weakness is a bit deeper than normal, because this is also the La Nina year, so more rain. Clinker export resumed in March, right? But it fizzled into the third quarter because of unfavorable pricing and because also of the currency element, because the Thai baht is very strong, whereas the Vietnamese dong, which is our main competitor in the clinker export, is very weak. So that puts us in a competitive disadvantage. And this is the a snapshot of our 9 months. And you can see that core operations improved significantly. As said earlier, sales actually declined 2% because of the lower contribution from power. But you can also see that our costs dropped more. Therefore, our gross profit increased by 20%. And I do this purposely because in the third quarter, we had a one-time litigation charge of 479 million, which is a provision of the cost that we expect to incur when we restore the site, the mining area that were referred to in the cases. So to see clearer on how the performance of the group is, I removed that particular item into the 9 months of 2025. So you can see that the increase in the SG&A is only 1%, and the gross profit is up by 46%. You can see here, this here tells you about the high operating leverage nature of the business, and that if even also our sales only up or slightly down, we still manage to gain significantly on the gross profit level because of the high OPL. And in net interest is also down a bit because our refinancing back in 2024 were actually of lower interest coupons. But this year, probably after the credit rating downgrade, our refinancing cost would be higher than compared to the previous one. Pre-tax profit was up 58%, and the normal operating profit, that is excluding income tax, forex, and the one-time litigation expense, is up 43%. EBITDA is up 9%, and this is EBITDA with one-time litigation expense. Because I tried to remove, but I was told by our account that I cannot do so because it's already put in the P&L. Okay, fine. But if I exclude the FX and the one-time litigation, the EBITDA margin would have gone up to 29% in the 9 months of 2025, instead of 26%. So 300 basis points improvement despite a 2% drop in sales is kind of like a good performance, I think. So in terms of division, construction materials in the 9 months was up 2%. It was up more than this in the earlier period. Petrochems up by 12%, and energy utilities, which used to be the star performer of our group, was down 26%. And the reason is very familiar. Now we go on to the profitability of each division. The EBITDA of the construction materials up 54%, and the petrochemicals are still negative. Sales grow 12%, but then EBITDA is still minus 5% because the spreads were slightly lower. And for the energy and utilities, it's down by 11% year on year. Now you recall that the sales here actually dropped 26%, and this is totally a leverage issue. But the EBITDA only dropped 11%. The reason for this is twofold. One is that we have higher throughput. In the press release that we issued, we indicated that the throughput of the power was up by around 9%, if I remember correctly. And the second one is efficiency, whereby our unit cost production was lower. And this is the look on the margin. The construction materials margin improved to about 19%. In the case of petrochem, 15%, and utilities, energy is 71%, largely because of the cost savings and the reduction in the unit cost as throughput is higher. And this is the look for the quarter-on-quarter. You can see that we already, this is also before the one-time expense, all right? And you can see that as of last year, we were generating EBITDA of about slightly over 1 billion per quarter. This time around, we are crossing 2 billion. Third quarter, with a full contribution of the other, and then with the seasonality of the construction material sector, we still managed to come at 2 billion. So we hope that this is more or less the kind of like the normalized EBITDA progression for us before the next round of contribution from the cost efficiency measures in our construction materials operations. So in terms of margin, you'd see that when we were doing 1.3 billion, EBITDA margin was about 15, and then it goes up to 26%. So we hope middle 25 to 30% sounds like a good place to be. But if you exclude the FX, we are actually at 32%. I would like to say that FX last year was a big deal. It caused our performance to swing so much. But this time around, we do not have much US dollar assets. So FX is not a very big factor. You can see it here. With FX, the EBITDA in the third quarter of last year was 15%, the margin. And if you exclude FX, it's 23. But in here, with FX, EBITDA margin is 26. Excluding it is 32. So like 400 basis points for the FX movement. This is by segment in terms of margins. And you will see that last year, the EBITDA margin of Consmat was negative. But that is because of FX element. So in here, when the number moves from negative to positive, I do not put a growth because it is a misleading. So you don't see any growth indicators there. And we focus on the fact that our sales 7% on a Q-on-Q basis because of the decline in the construction material, and then also because of the energy, and then our EBITDA, Consmat EBITDA, 19% on the third quarter, and then 8%, positive 8% in energy. So construction material EBITDA actually, without the one-time expense, was about 1.4 billion, which is 24% up Q-on-Q basis. But in this case, I just put in the one-time expense again because when I spoke to our account, I was instructed that it's not quite realistic to reflect without the one-time expense. So the group has changed. Previously, you would see that the petrochemical was quite a big performer, particularly in 2022 in terms of sales and in terms of EBITDA. And 2023, 2024, it is reverting to the normalized situation. And then you can also see that in terms of asset sales generation, construction material is a bigger contributor, but in terms of EBITDA, it actually didn't bring in as much. However, this year, 2025, you would see that construction material is starting to deliver more or contribute more into the EBITDA generation, where previously the power accounted for 54% of EBITDA in 2024. Now it's down to 44%, whereas the construction material was 32%, and now it's 43%. So the group is changing. Construction material is now the kind of like the main driver to cash flow generation. The cash flow coming from the power is still very, very visible and very resilient. And it is fair to say that when we look at the third quarter, it would be the template for the performance going forward, because we are already off the other regime. So everything now, whatever gains we will bring in terms of EBITDA performance, would come from two places. One is contribution of the green power capacity expansion, and second is the cost efficiency program, which continues and will continue because we will be completing the transformation of the 150 megawatt coal power plant into MSW. And given the coal prices at this point in time, we still have a gain by switching to MSW in terms of fuel. For our credit rating, we have been downgraded in late August, I think, from A- to BBB with an outlook stable. And that is coming from two places. I think I explained it before, but I'm not sure. One place is that our leverage is not coming down as fast as what desired. And number two is because our chairman unfortunately got into a case relating to misconduct and corruption. So we were taken down 2 notches. So we are BBB now. But our leverage is still okay. When it comes to performance, at the end of third quarter, our gross debt was 83 billion. Our net IBD was 74. And based on the fourth quarter historical EBITDA generation, our multiple is 7.9. This is, if you recall, back in 2024, our net IBD to EBITDA was 8.04 times. So this is a slight decline, no? But our EBITDA here includes the 479, which is the provision for the anticipated cost of site restoration. So if we adjust it just for the sake of, if you want to see how we did in terms of deleveraging, if we adjust this EBITDA, this ratio would be falling down to something like 7.5 times. Still high, admittedly, but at least because of operating efficiency and gains, we have been able to generate more EBITDA, and that bodes very well for next year, if and when our capex will start to decline significantly. So industry, just very quickly, the reason why construction material improved is because the government capital expenditure has also returned to normal. You can see that it's actually higher than the average of 2022, 2023, the spending in 2025 third quarter. This is the end of the year of the government. And also the spending of the state-owned enterprises, the capex also improved, although it's still below the 2022, 2023 level. So normalization of the capex spending of the government is favorable in general to the construction material companies, especially the producers of cement and ready-mix concrete. However, when we look at the broker's report on the private sector construction, it seems like the residential market is still very weak. So what it means is that for the following year, we would largely be very dependent on the capex spending of the government. And hopefully, even though we have an election year, it will still be normalized. Now, in terms of manufacturing, I put this in because we have petrochemicals. the global manufacturing outlook is still very soft. You can see here for the major economies in grouping, China is barely above 50, which is the break-even line between contraction and expansion, and US is below, and Eurozone is improving, but it's not crossing 50. Now, when we switch to the region, you can see that actually the PMI outlook seems to be much better than the big economies, whereby China is 51, like you can see here, right? It's around 51, but ASEAN in general is 53, and Thailand is 57, which is quite interesting, especially that the GDP in third quarter was very weak. However, but what this means is that if the economic activity, manufacturing activity in the region remains like this, then our petrochemical prices would be slightly better than generally indicated by the global trend, because between Thailand and ASEAN, we actually had a lot of intra-regional trade. Okay, so that is a marginal positive news for our price and for our spread going forward. In the case of the big markets for manufacturing, which is China and India, you can see that there is a recovery in the footwear, and footwear is our proxy for general manufacturing industries. And this is seasonal, related to the gift-giving season across the world. But you can also see that the PV, the solar panel application of the EVA in this case, is still quite soft. And in India, you will see that the unorganized footwear market is dropping below the organized, which means that the manufacturing outlook in India is weaker than in China, because in China, the footwear manufacturing is increasing their utilization rate, while the PV is going lower, but not lower than what we have seen in 2024. What does it mean for us? It means that we are not expecting the spread to change very much from where we are. So this is our petrochemical people indicating that the spread would be stable for the rest until January next year. What also that means that in strategy, in terms of strategy, we need to continue our switching mechanism. Like, for example, in the first quarter of this year, we were selling more of LDPE and less of the EVA. And then by the third quarter, we are less on LDPE and more on EVA, and we are more on the EVA, the higher value add EVA. So we do that every quarter, which is as a frequency, it's very, very fast for a manufacturing company. And the reason why we can do that is we are not that big. We are only 158. So we have the maximum flexibility to favor one or the other, even if we take into consideration that as you switch on product focus, your plant yield will be slightly different. So at the beginning of the year, we said that this year, our utilization rate target is 90%, and 9 months we are 76, so we can reach our target. Now, in terms of cost, you can see coal has increased, right? And so this is why I mentioned that the transformation of the 150 megawatt is kind of a favorable situation for us, because coal is still really kind of like a volatile price kind of commodity. But the good news is that it's not higher than last year. So still pretty depressed, higher than what it was in May, but still okay, manageable. But relative to our product conversion cost for the garbage, this is a good proposition for us. As for the gas, I still continue to show here that it remains depressed, which tells you that the FT probably is not going to be dynamic at the moment and going forward. But then I also would like to add that FT as a part of the pricing of electricity is no longer effective, because the pricing formula has been hijacked by social policy. So I would like to spend some time to talk to you about our ESG activities because we go off-ramp next year, right? And most of that is ESG related. So I'd like to show like what we have done and how far we have gone in the ESG thing. This is our carbon neutrality formulation. So you can see that we try to get as much of our waste back into the production. So the fly ash, for example, that we get from burning waste in the electricity goes into the cement composition along with the bottom ash as well. And then the water is recycled and then put back into the power plant. So we have an idea, a very good idea of what we can do to pursue the agenda of carbon neutrality, even though by nature, cement production and building materials in general is really quite carbon heavy when it comes to the processes. We maintain that our carbon neutrality target is 2043, and we have done our ESG capex, have done all of this, and we are moving into a deep technology arena, and let us wait and see what we can do about it. Our aim is to invest as low capex as possible. So we would be focusing on processes and process innovation as opposed to buying new technology and bolting it into our operations. So it's gonna be R&D heavy going forward. Now the green product, it's quite interesting that when we talk of green products, we do not actually look at all the cement manufacturers and see in details what exactly they're doing. But for us, the talk of the town is hydraulic cement. And it's a very old thing for us because we've been doing hydraulics since 2013. And we are the very first one to introduce this product. Elsewhere, they call it the green cement or low carbon cement, but it's hydraulic cement. And what does hydraulic do is that when you make a cement, the clinker is 93% generally. This is a Portland, but when you go hydraulic, the clinker will reduce to 80%. Technically speaking, without sacrificing standard, 75 to 80% is the current possible level, technically speaking, but there's always technological innovation that is happening. And so we work with that and we move along with that. Now, in August, I think, or September, our hydraulic cement received the certified green industry level 4. This is a program of the government to kind of like identify the products and how green they are. And green level 4 means that the green culture is already embedded into the processes and production mechanism of the company. And this industry level 4 will allow us to supply to all types of government projects. With this label, we can supply even to the smallest government works with our cement. So that's a good news for us. And this is the kind of GHG reduction by going hydraulic given our installed capacity. Now, additional green product is the mortar. We have been doing mortar since 1996, so it's also not new for us, but we bring it up because it seems to be the direction for most of the building materials, not only in Thailand, but also in the region. So we kind of say we are ahead on this game. What is mortar? Mortar is 75% hydraulic and the rest is aggregate. Remember, this hydraulic is already 80% clinker compared to the 90% in a normal Portland. So if you use mortar, you go even more green in terms of your construction activity. And mortar is very good substitute in general construction. possibly not good if you are going vertical construction, whereby the pressure is quite high as you go higher into the building. But it's good for low rise and also good for flat construction activities. Now, I mentioned to you that we have this fake wood and we are sending it to the US. And this is kind of like, if you go for wood, with our capacity, you can technically say that your operations or your building is equivalent to such number of trees per year, depending on the weight of the product that you are using. And this wood has all the advantages that natural wood doesn't give you. It is easy to design, use indoors and outdoors. It's not easy for the termites to eat, and it's water resistant. Also, it doesn't burn very, very easily. So that's a good thing too. This is a long-running story. Installed capacity basis, we already replaced coal with MSW in our clinker, in our calciner. And it's about 25% realized at the moment, because we are also modifying our clinker production facility. It's about 12%. So halfway, we are halfway. So hopefully we can push this. Once we have operations normalized, we can push this higher and higher, and it will be cheaper for us because conversion cost, as I mentioned before, is lower than coal. Interestingly, there are actually a lot of cement producers saying that they are using industrial waste. But in the portfolio of our machinery supplier, TPI POLENE is the only one that uses garbage. And between RDF imported or RDF localized and garbage, using garbage does a lot more to the environment than using the industrial waste. I'm just saying. And we have green raw materials. Before, when we have limestone we cannot use, we throw it out back. But now we process it one more time and try to squeeze the sand out of it with this facility, which is called CDA. And then we also, this is all about trying to reduce the limestone byproduct of our operation by washing and recycling it and putting it into the aggregate production process. So this is the detail of the CDA plant. And I have here a link if you want to see what are the merits of doing CDE. And this is not by us, this is by the supplier. So it's kind of like a good source of information. Now, what else do we have? We modified our clinker and we used some sort of a vortex generator, a different kind of motion inside the process, whereby it lowers the consumption of the electricity in general and increases the strength of the material, because the granules are kind of like processed. And because of that, the processing time using this kind of cement is also shorter. Then we also have a double incline clinker cooler. This is a new installation as well, which reduces again our electricity consumption because of the thermal efficiency, and the strength of cement is also improved. And we have a mobile crusher. Previously, we bring the big stones to a location, so from the mine to the location and crushing. So now, instead of that, we have an auxiliary facility whereby the crusher itself is the one that moves around and do the crushing near the site. So it saves us fuel. And this is our conversion of the 150 megawatts. It's done. The COD of the last part, which is to be this end of this month, and hopefully it will work very well. And so in 2026, we can really claim that we are zero carbon. But this is a very big undertaking and a pioneer. So we have to see like how well we can execute it. And it could be a benchmark for coal power plants in the region that wants to change into a better fuel. We move to electrification, and we hope to finish this by 2027. So what is converted now is the trucks, some of our trucks, and then some of our mining equipment. Most of our mining related equipment actually are electrified now. And then we have also installed EV charger in our petrol station to support our trucks. Yeah, these are our mining equipment that are moving to EV, and this is the kind of carbon emission that is reduced by just a switch to EV. Okay, yeah. Okay, let's go through this very, very quickly. The reason why we keep doing this is that we really do not know if we are moving along with what is desired globally when it comes to ESG and ESG achievement. So we go after awards and recognitions. We participate in competitions and such, just to see whether we are doing all right. We are in SET, we are given a AAA rating. Probably that will change, we don't know. It depends on how they feel about the company. We are in the TPIPL emerging, ESG emerging portfolio, and this is it is managed by Land and House Asset Management. And this is the performance of that particular portfolio. And we have joined the United Nations Global Compact. So going forward, we will be preparing a different kind of report that is in conjunction with UNGC to show to them that, where we are in terms of our ESG journey. And it's like 20,000 over entities all over the world that joins this compact. So probably we will be able to benchmark ourselves more properly, and then we can continue working on in areas where we are lagging or deficient. Yeah, as I mentioned before, we got the industry level 4 certification. So this is a very good thing because it brings a lot of benefit in terms of salability of our product. And then our cement board, that fake wood that I mentioned earlier, also received the green label with the Thailand Environment Institute. So hopefully we will be able to supply more into buildings and, you know, condominiums and such, and convince them to use this wood substitute instead of wood. Our film is certified in India, that it is appropriate to use for contact food, and we are just one of the 5 in the world that gets a certification in India. And so for the most part of this year, we were in India trying to kind of like introduce our product to them. And so hopefully next year we would be able to bring in a new possibility for in terms of growth driver. Okay, energy award. TPI POLENE Power is a class of its own, that's for sure. And we are always in the energy award in one way or another and in multiple years. But this year, once again, we won. This time around, what was in the consideration or was in the assessment was the MSW facility in Rayong. And this facility, we submitted it to the ASEAN Energy Award as well, whereby we compete with many other energy projects in the region. And we won the first honorable mention. We were first runner-up. The winner this year is the one from Indonesia. So it's a good thing that at least in some forum, TPI POLENE Power's ability to move into green renewable is recognized, and also help raise the profile of Thailand in the arena of renewable energy. And we also, I submitted a bid at a competition on assessment for Industrial Energy Efficiency Award, and we managed to get the distinction. What I presented here is the multifaceted aspects on the way we approach ESG enhancement in our building materials. So all the things that I mentioned to you, I've submitted it for evaluation, and we get recognized on that as well as Industrial Energy Efficiency Award for Thailand. And then we have TPI POLENE power, because from an MSW power plant, we have moved to become EV. We also moved to become solar, and then we have an MSW processing business backing up our power plant. So that makes us a diverse energy business. Even though we are small compared to the likes of the big names that everyone looks at, we, in our area, we are now considered as the diverse energy. We have multiple aspects of renewable and green energy into our operation. So we got recognized on that as well from the International Finance magazine. This one is interesting because it is a European Standard for Quality Research Award, but actually it's not research. The diamond category runs a survey among its members and vote on companies that they see as doing very well and managed very well in the context of the efficiency and in the context of current issues like ESG, and we score very well. We get a diamond category for 2024, and this is awarded at the beginning of the year. As usual, yes, by law, we are obligated to reforest the mining area, and we keep doing that. But we do more than that, and every year we always have this tree planting exercise participated by the top management of the company. So we get recognition on the green environment initiative. And this, we do not only do technical and processes, we also participate in discussion forums to kind of like share our knowledge and hopefully like, you know, convince people to kind of like do what we have been doing, or show people that it is possible to achieve something even with municipal solid waste. So we contribute to the body of knowledge when it comes to renewable and green energy. Okay, in the most contentious topic, and this is the last one, I promise, 1, 2, 3, 4, 5 cases. 4 is already settled, only 1 is remaining, and our action is restore the site. And this 1, 2, 3, 4 cost us 479 million. We will do the same for the last case, and if you want to kind of like put everything into the balance sheet, you can just use the same average price for the site restoration involved in the 4 cases. And that should be a good template for what it's gonna cost to restore the site for this remaining case. Okay. The second one is the misconduct, corruption and misconduct case in Region 1. This is the case number. And there are 2 things here. One is that the person that is identified is Kundachai, and his penalty is 8 years jail term with no parole. The second one as a co-defendant is TPI POLENE, which was fined for its participation in the misconduct, 160,000 baht. We have already paid the fine, even as we say that we are innocent of this accusation, because we didn't want anything overhanging on TPI POLENE. So, and this whole thing is still in the court of first instance. It's the lower court, and it has many stages before it gets to the Supreme Court. So based on the Constitution section, what's that, 29/2, it says that at this level, the person is assumed innocent, still assumed innocent. So I just would like to say this because we got penalized in every which way because of this particular case. I mean, the TPI POLENE and TPI POLENE power. And I think it's an overreaction, but that's the way it goes. But for the investors, please note that we are still in the case of Konprachai. It's Konprachai, and it's 8 years jail term for him if he cannot prove that he is innocent. And the case is still in the court of first instance. And it's a long, long way from here. And in the involvement of TPI POLENE, we paid the fine that was demanded. So that ends my presentation. If there are any questions.